Hello traders, it's August 30, Wednesday. This is Alan Ho, market analyst of GKFXPrime. I'm gonna share my daily analysis through this video, and first of all, let's review the major market movements. So the first instrument, we're referring to the dollar index in 4-hour charts. So the US dollar index, which measures the greenback strength in the trade weight basket of 6 major currencies, was fell to 2.5-year lows against a basket of global currencies on Tuesdays. It was down 0.21% to 91.98, following renewed geopolitical tensions after North Korea fired missiles that flew over Japan on Monday, and this was lifting the demand for safe haven assets. So the dollar attempted to paralyze on the back of US consumer confidence data that topped expectations, and the better than expected data, however, remained overshadowed by geopolitical uncertainty following North Korea's missile launch over Japan. On Tuesdays, the conference board announced the consumer confidence index rose in August to 122.9 despite expectations of a decline. So the uptick in geopolitical uncertainty prompted that and the rise in demand for safe haven currencies like the yen and Swiss francs, and also dampening greenback's attempt to paralyze us. As for the safe haven currencies, which are stronger on Tuesdays, with USD JPY fell 0.05% to 109.19, while USD CHF fell 0.9510, down 0.45%, following the missile test. The US and Japan and South Korea asked for United Nations Security Council's meetings. According to diplomats, a meeting of the 15-member Security Council is scheduled to be held later Tuesday. Meanwhile, the euro continued to strengthen against the greenback, with the pair EUR-USD rose 0.34% to traded around 1.2019, and this was in the wake of European Central Bank Mario Draghi's speech at Friday's Jackson Hole Summit, in which he appeared reluctant to mention the euro's strength. As for commodities markets, the gold price remained supported despite easing from nearly 11-month highs on Tuesday, as the dollar pared some of its loss, but geopolitical uncertainty limited the downside momentum of the gold price. So the gold price rose $3.98 or around 0.3% to trade at around $1,319.31 a troy ounce on Tuesdays. So the rally, however, was not live as traders appeared to take profit on the precious metals, spiked to multi-month high, following a rebound in the dollar amid better than expected consumer confidence data. So gold price is sensitive to move higher in the dollars. A stronger dollar makes gold more expensive for holders of foreign currencies. According to a report from the Commodity Futures Trading Commissions, the CFTC on Friday, stated that the sentiment on gold, however, remains positive as net bullish bets on gold rose to the highest in 9 months. So the hedge funds and money managers again raised their net long stance in gold and upping it by 16,795 contracts to 196,331 contracts. Then this is according to the data. Okay, so meanwhile, a net long stance in silver was raised by 7,150 contracts to 43,678 contracts. Well, the crude price was at the lower for a second day in a row, fell 13 cents to settle at $46.44 a barrel as investor concerns grew over a fall in demand for US oil, after Hurricane Harvey tore through Texas, shutting down more than 16% of overall US capacity. So crude oil pulls start to the week continue as Hurricane Harvey wreaked havoc in Texas, ripping through the heart of the US oil industry, knocking out several refineries in the regions and raging on refining capacity. So about 3 million barrels per day of US refining capacity had already been shut, with more with more shutdowns expected, sparking concern over an excess in crude oil supplies, the primary input at refiners. So the US crude productions also came under pressures due to Harvey. However, analysts believe the impact of lower crude demand at refineries would outweigh the dip in crude oil productions. So according to Director of Commodity Strategies at ETF Securities, Nitesh Shah said, while productions of crude oil has been hampered by the storms and the refinery shut-ins have crimped the demand for oil. So crude price, however, attempted to pay gains later in the sessions as traders look ahead to bullish US crude inventory data from the American Petroleum Institute on Tuesdays, as well as a further report from EIA on Wednesday. So analysts focus crude inventories fell by 1.9 million barrels in the week ended August 25, the 9th straight week of declines. So now we're going to review the highlighted economy data on yesterday, on Tuesday, as well as the focus data for today and the events. Right. So yesterday, United States was released the CB consumer confidence for August, and it was at 122.9, which is slightly better than the expectations of economists at 120.3. So as for today, we can focus on the a series of data that's going to be released by the United States, including the ADP non-farm employment change for August. And it is expected to be better as well, from previous 178,000 to 185,000. So besides of non-farm employment change, the United States we're going to release the gross domestic products, which is the second growth data of the United States. So it is expected to grow better than previous with 2.7% growth. Right, so the last data tonight is the crude oil inventories from the EIA. Right, so we only got the previous data so far with negative 0.503 millions. Right, so the result that's decreased that more than the previous is considered as the bullish signals for the oil price. Otherwise, that decrease that's lesser than the previous is considered is a bearish for the crude oil price. It's technical analysis sessions. So first instruments, we're referring to the Great British pounds against the US dollar in 4-hourly charts. So the pair GBP USD remained traded in a downtrend structures, but it was lost momentum since the price closed above the resistance level of 1.288. So it's surged above the both moving edge lines, and it's taken as a signal for it to experience a short-term retracement period. So currently the price traded above the both moving edge line but failed to close above the resistance level of 1.296, suggesting to be ranging between 1.289 in short terms. Alright, so the next resistance level referred to 1.3 and the support level referred to 1.278. Since the single currency remained traded in an uptrend structure against the US dollars, and it was rejected to close above the strong psychological resistance level of 1.2. So it's a signal for it to be ranging between 1.193 and 1.2 in short terms. So the both moving edge line continue to expanding upwards, and this taken as a signal for it to remain as uptrend structures. But however, the both movement lines shown in the MACD indicator were crossed and pointing downwards, so suggesting to move slightly lower in short term as retracements. A closure that's above 1.2 will be taken as further upside signals and probably to move higher towards the next resistance level at 1.22. The QV remained traded in a downtrend structure against the US dollars, and it was losing momentum since its rebound from the recent low at 0.71900. So currently the price is ranging between 0.72 and 0.727. So a closure that's below the support level of 0.719 will be a signal for it to drop further along with the downtrends, and the next support level we can refer to 0.715. The pair AUD USD can be seen remain traded in an uptrend, alright, so it was gaining back the momentum to move further higher since the price closed above the resistance level of 0.795. So the both moving edge lines expanding upward now. The additional with the upside signal showing the MACD indicator, it is expected to move further higher in short terms. So the next resistance level we can refer to 0.8. As for the safe haven Japanese yen, it is remain traded in a downtrend against the US dollars, but it failed to fall through the support level of 108.5 once again, so indicate that it was losing momentum, and currently the price ranging between 108.6 and 109.9, so a price closure that's above the resistance level of 110, suggesting to experience a short-term retracement periods and move further higher towards the next resistance level at 110.8. While the commodities market was retraced slightly from the recent highs, with the gold price which was rejected to close above the resistance level of $1,325 a troy ounce, and currently it was back to the level slightly higher than $1,300. So it's a signal for it to be traded in a tiny range in short terms, but however, the both moving edge line continue expanding upwards. Additional with the upside signal showing the MACD indicator, it is expected to move further higher after the price closes above the resistance level of $1,325. So the next resistance level we can refer to $1,346 a troy ounce. As for the oil price, with the West Texas Intermediate crude price, it is remained traded in an uptrend structures, but it was lost momentum and been traded lower lately. So currently, the price was traded above the Fibonacci retracement level of 50 order at the price of $46.22. So a closure below these levels is a signal for it to for shifting in directions become downtrends, and then it is expected to drop further lower towards the next support level at $45.30 a barrel. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.